JP Morgan Equity Premium Income ETF, known as ticker symbol JEPI or JEPY, is an ETF that dividend income focused investors have been buying like crazy for years now. And this is because of the fact that JEPY does pay a rather high dividend, or at least has historically every single month, consistently since the ETF's inception. But on top of cash flow and big juicy dividends, the JP Morgan Equity Premium Income ETF also has the potential to grow over time, which if we look at the last 1 year time frame, the ETF is almost up $4.50, up almost 9%, and this is for an ETF that most investors, including myself, buy mostly because of the dividend income. Now in this video, we're going to dig deep into this ETF, explain exactly how it works and why I personally own over 1,000 shares of JEPY. But on top of that, we're going to look at the actual numbers and figure out how much JEPY an investor would need to purchase to not only live free and clear off the dividend income, but also how long would it take in theory for an investor to double their money when it comes to buying this ETF. So whether you currently own one share of JEPY or maybe have planned on doing so, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So for those of you that might not be super aware, the JP Morgan Equity Premium Income ETF is an ETF that offers an interesting cover call strategy, and by writing out of the money S&P 500 index call options on top of investing into high quality holdings, things like Progressive, things like Amazon, Microsoft, etc. This ETF's performance, at least historically speaking, over multiple different time frames has been very, very impressive. And like we sort of touched on towards the beginning of this video, this ETF, which keep in mind is mostly an investment vehicle for those investors that want to generate income on a monthly basis. If you're an investor that doesn't have any interest in large dividends, if you're an investor that does not really care about cash flow month after month, then this ETF definitely is not for you. But for me personally, and for a lot of other income-focused or dividend-focused investors out there that want to generate cash flow today or tomorrow in order to reinvest more money into different dividend-paying stocks or ETFs, but on top of that also want to one day, maybe even soon, live completely free and clear off the dividend income that an ETF like this could offer, this ETF is definitely one to look into. Now in the max time frame since around 2020, JEPY is only up 13.75% as far as price return goes. But like I mentioned, this ETF offers a lot more than just growth potential. Now digging a little bit deeper into JEPY's dividend, we can see that over the last trailing 12 months, the dividend yield is 7.66%, and this might be a little bit lower than some investors would have hoped for, including myself. I was hoping that JEPY was going to average around 8 to 10% trailing 12-month dividend over time, but as we can see during times in the market where the market's less volatile, just looking historically at least, because of the cover call overlay and because of the amount of premiums that JEPY is going to be able to afford to pay, times where the market doesn't have as much volatility, JEPY and other cover call style ETFs might not always pay as much in dividends. But I think it's also fair to note that at least most of the time when the market is less volatile, when there's less crazy things going on, JEPY also has been moving up in ETF price, which as an investor, I don't mind whatsoever. But looking at some of the past dividends, we can see that during times where the market was super volatile back in 2022, for example, this ETF was paying upwards of 61 cents on a monthly basis to investors. Now, I'm not saying it will or not saying that it could, but if JEPY, for example, was paying 61 cents every single month, this ETF would be yielding upwards of 15% plus growth potential, which is insane. But as of recently, the ETF has only been paying around 30 cents the last few months or so, which again really goes to show how little volatility there currently is in the market and how little bit of premium there is to be gathered. Now, before we go through the exact numbers and we figure out how long it would take an investor that bought a significant portion into this ETF to not only double their money but then some, which stay tuned because it's pretty shocking. Let's first, just for fun, try to figure out how many shares of this ETF an investor would need to purchase in order to live completely free and clear off the dividends. So let's just say, for an example, an investor had a monthly expense of $3,600. And keep in mind, you can use these exact same calculations. It's very simple. Just take your monthly expenses, which again, for this example, $3,600, divided by the average dividend that JEPY has paid over the last 12 or so months, which let's say somewhere up around 38 cents per share per month. Now with these calculations, it's showing that an investor would need to purchase 9,473 shares of this ETF in order to have the dividend completely pay all their bills and maybe even a little bit extra. Now because JEPY is currently right around $57 per share, this means an investor would in theory, of course in theory, this is all just estimated, an investor would need to purchase $540,000 worth of the JP Morgan Equity Premium Income ETF in order to just have JEPY's dividend pay for all their expenses if their expenses were around $3,600 per month. Now, this might seem like a ton of money, but keep in mind, if you were to invest in most other stocks or ETFs out there, you would need to spend probably upwards of $1 million in order to even have a chance for the dividend from day one to be able to cover your bills. Now, don't get me wrong, I'm by no means saying that an investor would be better off buying only JEPY in their portfolio. As you can see right here, this is my long-term dividend growth portfolio, which I currently have as of right now around 1,248 shares of JEPY, but I also have other stocks and ETFs, things like Apple. I have 1,000 shares of that. I have things like 1,200 shares of Verizon, etc., and I do personally believe that diversification is king. But regardless, the math is the math, and it's pretty interesting that there are so many different investment vehicles where an investor in theory could invest $500,000 and live completely free and clear off dividend income. Now, lastly, to get an idea on how long it would take an investor to double their money if they wanted to invest a significant portion into JEPY, looking at the dividend calculator with a $50,000 investment, starting off investing into JEPY, which currently yields somewhere around 10%. Now, I say 10% because although volatility has been super low, I think it's going to pick up very soon here, so we should probably be getting around 8 to 10% when it comes to JEPY's dividend over the next 12 months, and keep in mind these are all just estimations. An expected annual dividend amount increase of 1% because it's sort of hard to know what JEPY's dividend is going to do in the future. A $1 contribution, so basically just going off to that first $50,000 and nothing else. An expected annual share price appreciation of 4%. Again, very hard to know what's going to happen in the future. But if we were to calculate this out, you can see year one, an investment of $50,000 into JEPY would yield around $5,200 per year in dividends, which is substantial, again, relative to the amount invested. Year number two, because those dividends were reinvested, and of course, JEPY moved up in price a little bit, this is up to $57,000 with $1,500 per year in dividends. Now, just to not waste any more time, if we scroll through here, by year number 7 years in theory, just going off the numbers that we went off of, this portfolio would then double. In just a small amount of time, 7 years, the portfolio would be at $108,000 with almost $10,000 per year in dividends. So in theory, a $50,000 investment would basically double in 7 years. And what's maybe even best of all when it comes to this is that the portfolio is paying a massive sum of cash flow every single year, which for this example, we're reinvesting into more shares of JEPY, but an investor, of course, could use these dividends for life expenses, for vacations, or whatever the case might be. So although the fact that there's plenty of different options, plenty of different ways in order for an investor to say double their money in just 7 years, and there's also other ways for an investor in theory to live off a dividend income with just a relatively small amount of money invested, I think the JP Morgan Equity Premium Income ETF, JEPY, or JEPY's sister or brother, JEPQ, are both definitely great income-focused, income-oriented ETFs that an investor that's looking to achieve those sort of things should definitely look into. Now, like I sort of mentioned, I never personally would build out an entire portfolio with just income-oriented ETFs because I do also want to capture some upside exposure when the market does turn bullish, and especially being a 31-year-old dividend growth investor that doesn't necessarily want to retire today or tomorrow, it doesn't really make sense for me to do so. But having a portion of my portfolio with these dividend income-focused investments has been a ton of fun over the years and has been able to allow me to invest consistent large sum of money into other holdings like SCHD, Apple, or other things. But lastly, now I want to hear from you guys down below when it comes to the JP Morgan Equity Premium Income ETF. Are you currently buying this one as of now in 2024? And if so, how many shares do you have throughout all your portfolios as of right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.